Good day all. Ira Epstein of Linn and Associates with your metals market wrap-up for this Wednesday, the 20th of August, 2019, and we're right now just after 4:30 p.m. Central Daylight Time. Now, the event of the day, if you can call it that, was the FOMC minutes that came out at 1 p.m. It kept the rally that was already in place in stocks going, but they really did rally up, and these markets were going on towards the highs of the day late in the session, and I'm talking late in the last 1 minute. So while they settled here, they were a little better. Gold was about $3 lower in the last ticks of the day, and the silver down from here maybe a nickel or so. So the question is, in reading those minutes, what's going on? And I think you have to surmise that what the Fed is saying is this was an insurance cut. They're not trying to make this a cycle, but I don't know that they have the power to stop it. They admit they're looking at world trade. They're concerned, and they think the big headwind out there is trade issues. The consumer's doing fine. We've seen reports since this report came out, but I don't see anything that's gotten better yet in trade, although at this minute, Mr. Lighthizer is speaking in the White House. They're having meetings with Japan about auto imports into the U.S., and maybe something can get done there. Don't expect anything on Mexico or Canada trade deals until we get further along with Congress back in session and pressure being put on them to get that done. So in the meantime, it's the end of summer. Traders are already talking about Labor Day a week from this coming weekend. So you've got to think that way through as to what's going on and where the trader mentality is. In looking at the gold market, for the week, you're still down $7.90. So the market hasn't improved itself. It's still off those highs, as you can see. When we take a look at a daily bar chart, I just see distribution. I'm not seeing anything that I wish I could say is bullish or bearish. Look at this day's high right here, and I'll just show it to you. It's easier to do it this way. That day, you've been caught in that range. Now, how many days? Over a week, basically a week and a half. So just sort of caught right here. The trend of the market is defined by the swing line, which has 5 variables to it. The swing line looks to see is the market have an inside day, which means you didn't take out yesterday's high or low. Did you make a higher high or a lower low day, or did you have an outside day up or down? Based on those variables, I set up a set of terms where the line automatically draws itself. So right now the pattern is bearish. You've got lower highs and certainly lower lows. That's a bear pattern until 1538.60 is taken out or a new pattern develops. If the market takes out 1503, it's still in the pattern of lower highs and lower lows. Support in the market comes in against the 1492 area, but if we go back, we see that that average is moving about $5 a day recently. So I would be surprised if we're not into the 1487, 88 range tonight when the market reopens. Not that price will be there, but that's where that 18-day average of support will start coming in. Did I say 88? I'm adding to that. Let's say 1495. That's what I'm trying to say. I did that the wrong way. It's for looking at downside targets, that's one. Upside targets, well, I don't have one just now unless the market were to just get a piece of bullish news and roar for some reason, and then the upper Bollinger Band becomes the resistance point. In terms of momentum, you lost the embedded reading. That often, I wish I could use the word always, but that wouldn't be accurate. That often leads to price and the 18-day average coming together. Now, the longer it takes, what happens is, and by the way, we lost that embedded reading on Monday. You didn't gain it back on Tuesday or today. The longer it takes, the moving average often moves up, so the shallower the price break. That's all that it means to me. Does the market have momentum to the upside? No, it's downside right now. When I come to GLD, I'm getting the same type of pattern. I lost the embedded reading today. If I take you back on this, and I'll have to do it this way. Here we go. Prior to today, both numbers over 80, both over 80, both over 80. Do you see that? So that was an embedded reading. You even had it there that it was over it and so on. And you can see as that continued, the market was going basically higher. Now, all of a sudden, the market stalled out, didn't make the really big higher high since then, and you've lost that momentum. It probably means that we've got a market that wants to try a correction. Now, when can you gain back the embedded reading? Only the day after it's lost. So you can't gain it back in the futures markets. You have to go through the whole process, which is a minimum from now probably 3 to 5 days. This can gain it back tomorrow. This had been leading futures. Now the question is it catching up with it? When I come over to the GDX, as I've said, this market's the weakest part of that gold complex. It's had the lower highs, lower and low pattern. It's got upside bias but downside momentum. The market is not it's not in sync with itself. I wouldn't be surprised if the battleground keeps fighting at that 18-day average for a bit here. In the gold-silver ratio, the market broke back underneath the 18-day average of closes, which in theory to me means that silver's gaining back on gold. And when you look at this chart, even though the swing line's down and the market has got overbought, it's still acting stronger. In this market, you were up a fraction while the gold was basically unchanged. In the copper market, I saw today out of our staff here where they wrote that we had hit a fourth downside objective on price counts. Now, what price counts are swing lines and Fibonacci on steroids. That's the way to think of it. When a trend sets in off of a given pattern, and this would have been the pattern, you start getting targets to the downside. The firm is saying you've hit the downside target. I argue that that's a zone. It does not mean a trend is over. You've hit a zone. If you can't get trade deals done, the fundamentals will weigh on the market, and you could go even further here to the 250, 250. But I do recognize price counts. I do pay attention to them, and I'm seeing we've got a bit of divergence. What we have is momentum trying to turn up. We've got the bias down and the trend down. I'm going to look for resistance at 261.55, but if you take out 263.20, this area with the price counts got an argument that something else is brewing in the market. How long that lasts, I don't know, but that's what charts do. They give you ideas. When we look at the platinum market, how long have we been fighting against this 100-day average? We came down, fought with it here, came back, missed it this day, but we hit it every day since then. So that's the key number. The 18-day average is acting as the resistance on it. The trend is down, but with this outside day up, I have to wonder, are we setting up a pattern of higher lows and get a close over 860.20, and that could become bullish all of a sudden. So I think the close tomorrow is going to be very important. In the palladium market, we had been in a run to the upside. I now think we're trying to pull back to the 18-day average to regroup. The market is not acting like it wants to fall through this 100-day average, but it's also not trending. You have a pattern of a lower low and a higher high. That is not a trend. So visually, it's one thing. Trending-wise, it's not there. You're in overbought territory. I view any reading in the slow stochastic that is over 70 without both numbers being over 80 is just an overbought condition. In the dollar index, another day where the dollar's higher. Even the president was talking about it on another one of his impromptu conferences. But these, we're approaching in the futures the massive high. And in the cash markets, when you look at indexes and cash, the dollar's really gained on everything else. So the question is what's going on, and it's probably a risk-on attitude, and that's why you've got this move today. Remember, we had Monday one way, Tuesday a reversal of it. Now we're going back up, and the question is, does this market get any legs to it, and what's going on with interest rates? That's what we have to watch. I write about all this twice a day. So what I do is before 8 p.m. at night, I send out one of my written updates to my subscribers. I also back it up with a morning subscriber video that I typically start recording at 6 a.m. Central Daylight Time. I want to have it in your hands ideally before 7 a.m. Central Daylight Time. So that gives me enough time so I can render it and do everything that I have to for you. The video and the written really go hand in hand because I'm giving you ideas as to what goes on. The charts that are in the video will look like this. They're different than the ones you see here. They're going to have more studies on them and a heck of a lot more information from me than I do at this point, because I can say buy here, sell there, do this, do that, where I don't do that in these videos. My written updates look like this. One comes out at approximately 11:30 a.m. Central Daylight Time, the other at 8, and I'll review what's coming up for the next day, what the market's been looking at. For some of you, you like audio commentary as well. I put out typically, in the summer, sometimes it's just once a day, but typically go fall, winter, spring, 2 a day. One at about 11:30, 12 in the morning, the other before 8 p.m. at night. Summertime, I try to have something of a life. I think you understand that. The daily numbers have to do with window envelopes, which is purely a profit-taking tool. It's similar in a fashion, if you will, to Bollinger Bands, but the word is a fashion. I teach that all in my charting course. To find out more or to get a free trial to it, that's what I'd like you to do, simply go to our website. And in our website, go to the free offer section. You can take it from there. If you need help with that, go to you can call my staff, they'll help you. This is normally $60 every 30 days. It is free to you to give it a try. Also be certain that if you haven't tried our trading platforms or if you haven't had our QT Mobile, you want to do that, because all my information flows right in that. You'll get a push notification whenever I do anything. I'm Ira Epstein. You have a good day. See you tomorrow.